Key figures from Jersey's finance industry gathered at the Pomdor Hotel recently for the annual AIB breakfast briefing. The bank's chief bond economist, Oliver Mangan, was in the island to talk about the Irish economy in the context of the global recession.
The factors that are holding back the recession over the past 12 months are not going to abate anytime soon. Firstly, the recovery has been driven by temporary factors like stock building, the fiscal stimulus worldwide. And in terms of the banking sector, what we were saying last year still applies. Banks are still very much focused on deleveraging, reducing their loans to deposit ratio, rebuilding their capital. So all in all, that means they're much less likely to lend. And credit growth remains, very constrained right across the world, whether you're in the Eurozone, the UK, the US, it's either negative or it's zero. In Ireland's case, in terms of spending, we have between 2009 and 2011, we have a fiscal contraction which is close to 10% of GDP. And as in the UK, the main emphasis has been on the spending side, but we've actually cut public sector pay by 15%, welfare by 5%. I saw in the news last night when I came in here that I think the focus in the UK will be cutting public sector numbers. Could be up to 500,000 jobs gone in the public sector. So it's going to be a different approach, and it's going to be very painful for the people who lose their jobs. And obviously, another 500,000 on the dole queue is not going to do anything for consumer spending or the pace of recovery. Now, the indicators, in fact, have turned much earlier than anticipated. When you take the retail sales, ex-autos, they've risen in the first 4 months of the year. Retail sales in the first quarter are up by over 1% on Q4 levels. We've had a recovery in consumer confidence. And in particular, the export sectors have kicked into life. There's been a phenomenal recovery in Irish exports, and the Eurozone takes about 45% of our exports. We still have negative inflation in Ireland. It's a very, very open economy, a trading economy. And in terms of our exports, 10 years ago it was 80% goods, 20% services. Now it's nearly a 50-50% split. Ireland is small. We're talking about 4.5 million people. We've 8 of the top 10 ICT companies, 8 of the top 10 pharmaceutical companies, 15 of the top 25 medical care devices, and over 50% of the leading financial firms, all located in a country with a population of 4.5 million. And for us, the key is a very low rate of corporation tax, but that's not enough. I mean, you have to have a competitive cost base in regard to Western Europe. I mean, we're not going to compete with, India, or we're not going to compete with Poland. But for new industries, highly profitable industries, industries which are looking for a highly skilled workforce, Ireland is the place to locate. Now, I should say the government is very unpopular, and the leader of the main opposition party is not exactly seen as a Taoiseach in waiting or a Prime Minister in waiting. Believe it or not, the most popular man in the country is our Chancellor, our Finance Minister, because he came in 2008 in difficult circumstances, and he's been brutally honest with people in terms of what he's going to do. And he said, everybody's going to feel the pain. So we are, as I say, in a comfortable position when it comes to funding. We're in a strong position to ride out the storm that's gripped peripheral markets. The Finance Minister again stood up in the Irish Parliament on the 30th of March and told each bank what it had to do over the balance of the year in terms of cleansing its balance sheet and full recapitalisation. The key thing in regard to the main Irish banks, if they can't raise the capital internally or from their shareholders, the state will put in the money. And the money doesn't have to be borrowed, it comes out of the National Pension Reserve Fund. So the banks will be strongly capitalised by the end of the year and the balance sheet's cleansed. I think we've come out of the long dark tunnel. The economy is now on the road to recovery. It's export-led, and most of the difficult decisions are behind us. They'd want to be. It's 3 years now in train, so we're getting rather weary of it at this stage.
AIB Jersey's Chief Executive Joe Moynihan says the breakfast briefing is an important event in the bank's calendar.
It's important for us, we think, to give a balanced view of what's happening with the Irish economy. There is a lot of misunderstanding, misinterpretation of events, and I think this, on an annual basis, gives us an opportunity to bring an expert over to lay out the facts as they are. The response from last year's briefing was really, really positive. Obviously, last year the story was a lot more negative, I guess, than today's. People appreciated the fact that we didn't try and spin anything. The hard facts, as I said at the introduction, were somewhat brutal last year. Again, this year, nothing being hidden, very upfront. Thankfully, the story's a little bit more positive, which is good.